welcome in. You're listening to a daily editorial on the Korelin Economics Report. Time out. Korelin, appreciate you joining me. You know, we've done a lot of daily editorials here at the Silver Summit, and all of them have been interesting. But, you know, a guy who I've gotten to know at this particular Silver Summit, knew him kind of on a cursory level before. We're getting to know each other quite well right now, is Jeff Christian. I am really starting to respect Jeff. A lot of people in our industry feel that Jeff is way off base with some of his issues about price manipulation, et cetera, in the silver market. But, you know, I have to tell you that there's a lot of truth in a lot of what Jeff has to say. Jeff has been involved in the industry for quite some time now. He is the managing partner of the CPM group, you know, and they deal a lot with, among other people, folks in the mining industry. And I guess, Jeff, the question that I would have for you is, what do you see in terms of short to mid-term? Really careful to talk about time frame here, particularly in our industry, but short to mid-term, what do you see for the investment climate in junior resource stocks?
Well, you know, it's a very difficult time for junior resource stocks right now. They're having a very tough time raising debt and equity. I think investors are looking at the resource industry and they have a series of questions. One is, can the management of individual companies perform and move these companies forward? But there are other issues. One is what's going on with resource nationalism and environmental regulations and just permitting, which has become increasingly more difficult, and it's just going to get worse and worse, which just makes it harder for the resource stocks to attract capital. And the other one is, I think people are starting to revisit the whole concept of a commodity super cycle and say to themselves, really, are commodity prices going to continue to rise, or are they already high? Are they close to their peak? So we're finding a lot of investor caution, which is just making it very difficult for these companies to finance themselves. That's probably going to lead to some mergers and acquisitions. And ultimately, some of these companies and their properties will move forward because the world needs these goods. It's just that we're going through a very tough time in terms of raising the capital that's needed for real economic development.
The thing that I find to be gratifying, and I don't recall if I mentioned this, Jeff was on a panel last night that I had the privilege of moderating, and I think I mentioned in that panel that of late, I am fairly comfortable now whenever I look at, you know, our portfolio, in the sense that we're probably 35% invested in junior resource companies, and I'm seeing a lot of green numbers now. Now, albeit not hugely green numbers, you know, but I'm seeing some pretty green numbers there. And my gut level feeling is, I think for fundamental reasons, that trend is going to continue. Do you think I'm nuts?
No, I happen to think that you're probably seeing the beginning of the next leg up in a lot of these companies moving forward. It's interesting because I've been in the metals business since the 70s, and only in the last year or so, as I give speeches around the world, have people asked me, and I've had this question asked to me twice in presentations, are you personally invested in gold and silver and junior resource stocks?
Even I know the answer to that one.
And I just, you know, I look at them with surprise. It's like, well, of course. I mean, you know, why would I be
doing what I'm doing? Yeah,
for 30 years, 35 years if I weren't? But that, you know, that calls back to what I was saying, which is just people starting to question this. But you have to go back to fundamental economics. The world needs these metals, and these mines have to be developed one way or another.
Pretty simple. Pretty simple, pretty cut and dry. I agree. You know, I think a problem that a lot of investors have, those folks who are active in the junior resource sector, is that I think they oftentimes let their emotions get the best of them. As somebody once said, you know, investing in precious metals is almost like a disease. People, they have a tendency to think with their hearts and not with their intellect. And I think that's sad, personally.
Yeah, my company, CPM Group, grew out of Goldman Sachs, and if I can bore you with a little anecdote, I started working, I was running the research department at J. Aron, which was a trading company, which was merged into Goldman. And the day they announced the merger, they said, you're going to go over work at Goldman because Goldman wants you to advise their clients. And I went over there, and Leon Cooperman was the head of research at the time. I was going to report to the chief economist, who reported to Leon. And as I was shaking Leon's hands, and I was probably 26 years old at the time, He said, I want you to know, I think gold is a religion, not an investment. And I was the most vociferous opponent to buying J. Aaron. And because I was 26 and very naive, I kept holding onto his hand. I said, I think that for many people, gold's a religion, but I think you'll be very impressed with a lot of the quantitative research we've been doing that shows that even though a lot of people treat it and behave toward gold as if it's a religion, you can actually invest in it as if it were a real investment and do well. And Leon said, no, I won't be.
That shows you how people have a tendency not to think with their intellect, but with their emotions.
Now, in Leon's defense, he's done very well investing in gold subsequently, in gold mining companies.
I would imagine he has. What do you guys look at? I know you do a lot of advisory work for mining company executives. What, in your opinion, are probably the 5 most important considerations that investors should look at if they're thinking about buying a mining stock?
Well, I think the number one thing that we look at is management. You've got to have, you can have the best property, but without good management, it will not go forward. Similarly, you can have really good management and no property, and they can go out and find a good property.
I would agree. I've seen it happen.
So the number one thing is management, and a subset, because 5 is tough to come up with, the subset is number 2, financial awareness and sophistication. A lot of mining companies are run by geologists and mining engineers, which are very important, but they don't understand the financial aspects of their products. Third thing is properties. Where are their properties? Are the properties in politically stable, attractive jurisdictions, or are they looking in places that can wobble? Because we've seen a lot of wobbling in jurisdictions around the world, and it's probably going to get worse. Another thing is, do they have a realistic attitude toward it? And the fifth thing is the management focused on moving properties forward? A lot of times you'll find mining companies, and they say, well, we have this property and we need X millions of dollars to move it forward. But if you gave us 2X, we would go off in tangents. And that's not what investors should hear. Investors should say, we, the management, are driven to moving these properties into production and creating real wealth and cash flow for the shareholders.
Last question. I mean, I certainly, obviously, nobody can disagree with that, assuming you're thinking with your intellect and not with your emotions. But, I think the trend in the future is going to become stronger and stronger in the direction of M&A, mergers and acquisitions, and I think the reason the logical reason behind that is, as you said, as you pointed out yesterday, it's very difficult to raise money. It's very difficult to go it alone now for a junior mining company. The M&A theater is a perfect place for this thing to evolve into, in my opinion.
Yeah, and that actually is the history of gold mining and mining in general. I mean, you have a lot of junior companies that explore, identify, do the research, do the delineation, do initial development work, and then they get merged into larger companies. The entrepreneurially spirited management goes off and starts a new company and starts looking for new properties. And that's the cycle that repeats itself generation after generation in the mining business, and it's going to continue.
Life continues, for lack of better terms. Jeff Christian, managing partner of the CPM Group. We have a banner for the CPM Group on our website. If you want to find out more about it, click on that banner. Thanks for listening.